All right, time for our Savings Scribes segment, the segment where we talk to one of the Savings Scribes in the team, as in our finance journos. And this week we're talking to Bea Garcia, who's recently written a piece for infochoice.com.au on the bank of mum and dad. G'day, Bea. Great to have you on the Savings Tip Chat podcast once again.
Hey guys, thanks for having me again.
Bea, before we start, what is your savings tip for this week?
My savings tip this week is quite simple. It's to bring water everywhere. Bring a reusable water bottle and refill it whenever you can. It really just saves you from constantly buying overpriced drinks, and I think it can be especially useful while traveling, where bottled water prices can jump easily.
I love that. Although some of the water bottles these days are, quite an investment.
Yeah, that's true.
Yeah, that's a good one. Because when you are out and about, especially on a hot day, and you're very thirsty, those vending machines with the Coke with ice all over it on the vending machine art does look very tempting sometimes, and it is quite ridiculous how expensive. I'm sure like a can of Coke or something from one of those could easily set you back $5 or more, which is a lot more than they're really worth. So just keeping a bottle of water on yourself and staying hydrated can certainly reduce the temptation, and also health benefit too. Much better for you, much more hydrating drinking water than anything you'll get out of a vending machine. So nice one, Bea. Getting into this topic, Bank of Mum and Dad. We talk about it a fair bit on this podcast, but in case people aren't aware, I think it's probably worth starting off with just a general summary of what the Bank of Mum and Dad actually means.
So the bank of mom and dad is really just a catchy way of describing financial help from parents to their children when buying a home. It's not one size fits all. It can take many different forms depending on the family situation. For some, it can be as simple as a cash gift to help cover the deposit. For others, it can be a structured loan. But what's really interesting is how common this has become with property prices rising. Saving a full 20% deposit on your own has become incredibly difficult for many first time buyers. That's why more young people are turning to their parents for help. It's a very realistic, practical way to get into the market. In a way, parents have become one of the biggest informal lenders in the housing space.
That's amazing, isn't it? So apart from just, handing a wad of cash to your kids for a deposit, what's some other ways that parents can sort of help their kids get into the property market, Bea?
Yeah, so there are quite a few options. Like I mentioned, the most common is a cash gift, where parents contribute part or sometimes even all of the deposit. This can be usually around 10-20% of the property value. And lenders will often require a formal letter confirming it's a gift and that it doesn't need to be repaid. Another option is an interest-free loan. This can be appealing because it protects the parents' money legally. It remains their asset and isn't treated as part of the child's shared property if something like, let's say, a breakup happens. And then there are more involved approaches, like parents buying a property themselves and renting it to their child, or even co-purchasing a home together and splitting ownership and repayments. Acting as a guarantor is one thing too. It's quite common as well. In this case, parents use their own property as security to help their child qualify for a loan or avoid paying lender's mortgage insurance. But keep in mind that each of these options will come with their own benefits and risks, so families really will need to think carefully about what suits them best.
Yeah, absolutely. No, it does seem very common these days, and it makes sense. It's a form of early inheritance, which it probably does make more sense to give if you are going to help your kids out to help them out at what now while they're in that most difficult period of their life, trying to afford to buy a house, as opposed to say when you pass away. And often when you pass away, your kids could be in their 60s. So, and by then maybe that they might actually not need that assistance. So it is giving them that inheritance. While they most need it. So I can understand why it's very common at the moment, particularly that given that a lot of boomers are very very cashed up, having benefited from a lot of the booms that we saw sort of through the 80s and the early to mid 2010s, particularly with property prices absolutely exploding. So, there's a lot of very cashed up mums and dads that have become banks for their kids. But I just wondered, Bay, are there any downsides for the kids relying on the bank of mum and dad?
Yeah, there definitely are, and it's very important not to overlook them. While parental support can make home ownership possible much sooner, it can also introduce financial and emotional risks. One of the biggest concerns is really what happens if your circumstances change. For example, like if the child loses their job or they go through a relationship breakdown. And in those cases, parents who've contributed money might not get it back, or worse, they could even find themselves financially exposed. If parents act as guarantors, the risk can be even higher. They're essentially putting their own property on the line, which means that if the loan isn't repaid, the lender could go after them. Well, it's not that common. It can be a real possibility. And then there's also, of course, the relationship side to think about. Money can complicate family dynamics, especially if expectations aren't clearly communicated upfront. So disagreements over payments, ownership, or even lifestyle choices can create tension. So while the benefits are clear, it's just as important to have open conversations and put proper agreements in place before you move forward.
Yes, I've heard a few horror stories. Obviously, I'm of the age group where I have friends who have been the bank of mum and dad for their own children, and things may not always go as they think. I have got a friend who's a lawyer who has was telling me about some case studies that he knows of where mum and dad have lost their homes, and the equity that they had in their own places has been eroded through quite a few sad stories, and there's a lot of things that can happen along the way. So yeah, it's not always the big solution either for the young person buying the home, or for the mum and dad. And I think I even remember David Koshy speaking about this. He had some friends in his circle that had gone through some troubles from getting into those types of arrangements. So, what should first home buyers in particular keep in mind, before sort of accepting help from their parents, because it can be a two-edged sword?
Yeah, definitely. I think the key is to treat it like a real financial arrangement and not just a family favor. It's important to understand exactly what kind of support is being offered. Is it a gift, a loan, or maybe something more involved, and how that will affect your future finances. You also need to think about independence because while the help can get you into the market faster, it may come with expectations or obligations that can last for years. And it's also worth considering how it impacts your borrowing power and your long term goals. And just as importantly, like I've mentioned earlier, have open conversations early. The more transparent everyone is about expectations, the less likely is it that issues will come up later on.
Yeah, absolutely. That's all worth keeping in mind. I mean, yeah, while this sort of assistance from the bank of mum and dad can really make a huge difference and really be the difference in between you affording a house or not, it certainly can create a huge source of tension. From both sides, if the parents are sort of holding it over their child as leverage and forcing them to, um, you know, make certain choices because they have this financial power over them, and their kids have to do as they say. But then on the other hand, too, if your kids are sort of taking the mick and they're not paying the loan, and say you've offered your own property up as guarantee, as yeah, for their loan, then you could be in real strife if they're not, if they default on the loan, and you're unable to pay the repayments for them. That could cause real problems. So yeah, it's certainly not without risks on both sides there. But yeah, nice summary there, Bayer. But for those listening who want to get a more complete read of Bayer's guides to the Bank of Mum and Dad, you can visit infochoice.com.au and read out these in full there. Bayer Garcia, thank you so much for your time on the Savings Tip Jar.
Thanks, Tom and Denise.
Great to have you, Bayer.